What is going on, everybody? Billy here from Storm Trades with another trade review. Today we're going to run through a gold futures trade from Wednesday, August 6th in the New York AM trading session. A trade that would have provided us a nice 2R win off of a continuation entry model. I had a neutral daily bias on gold today, and but the hourly wasn't so simple in that it was sort of hard to read. We didn't have a change in state delivery that was clear, but we just had to read the hourly market structure to get an idea of which way we wanted to get on sides. So anyway, let's get right after it. Right now, I've got the daily chart pulled up. These are the last 4 daily candles. I set up the daily chart the same way every day. In every single one of these videos, it probably gets boring, but this is how I do it. I'm gonna mark off the previous daily high and the previous daily low. I just said that in reverse, but you can see. I always want to run a fib from the previous daily candle, right? This is something I learned from T-Trades, and effectively, if we're expecting price to continue higher, we want to see the wick, and we just don't want to see price start closing below the midpoint, and vice versa, right? So it just sort of helps us understand the narrative. A lot of this just helping us form a narrative, and the narrative, if it doesn't make sense, well then there's no trading in that pair. But anyway, so we got the previous daily high and low marked out here. Now, you got to ask yourself, it's what I'm always asking myself, is there any internal or external range liquidity that we are currently delivering from? And well, we are. We have a large bearish daily fair value gap. Okay, we have taken liquidity from the Tuesday's candle, right? Took liquidity. We can't form a reversal without a swing point, and although this swing point is not confirmed yet, it appears as though we are forming a swing point. It would make sense, by the way, to form one right here because we entered into some internal range liquidity. That said, okay, this right here is also internal range liquidity. That's a volume imbalance. So we are sort of sandwiched in between these, okay? And we are currently trading in the upper quadrant of the previous daily candle's midpoint. So not easy to read this this daily bias, right? So whenever that's the case, I'm usually going to mark it off as a neutral daily bias. We did sweep liquidity here for Mondays. So Monday's candle was swept by Tuesdays when we entered into that bearish daily fair value gap. And it looks like price should come down here. However, we swept this internal range liquidity. So I'm just going to mark off here what I did this morning, which was I'm not 100% sure which way it's going to go. Again, it doesn't have to go the way I want it to go anyway, but if it's not clear, it's neutral. Now, can we trade when we have a neutral daily bias? Maybe you don't. I do, and because I'm relying heavily on the hourly time frame to help me understand market structure. Now we're going to hop down on the hourly right now and just sort of see that the hourly also was not very clear. Right now, this is one of the reasons I did not trade this pair today. But we're doing a trade review, and we're seeing that there was in fact a trade there, and we're trying to learn every day. That's what we're trying to do. That's why we go through our the pairs that we trade, and I actually had a really good CL trade on this day, but I missed this long, so I just want to review it and see what I could have done better. All right, so I'm going to pull up the hourly chart, right? And the hourly chart, I'm always looking for change in state of delivery, right? Well, we had a nice sweep up here, okay? We had a nice sweep. This was the liquidity raid. I'm just going to move this over here. All right, so we had that nice sweep into the bearish daily fair value gap, and we had a trade away. However, for this to be a change in the state of delivery, the way that I look at it is it need to be down here. Okay, this is a series of up close candles that took liquidity. We have not gone below that yet. Now, conversely, for this to be a reversal here and be a change in state of delivery, I would need to see a close above these series of down close candles. So I don't have a change in state of delivery. This is why I didn't trade this pair this day. However, looking back on it, there was a way to understand what was happening on the hourly chart. And basically, what we were looking at here is we actually had a hourly fair value gap that we came down, and it formed a V-shaped recovery out of that, right? So it's a very bullish signature in price. And we actually created an inversion fair value gap on the hourly time frame right here and closed very strong through it. Okay. At this time, I can look at the M5 chart, and as long as I have a ton of room to go with regards to the average daily range, I can look to start to get on sides with long trades. Now, do we have any draws on liquidity to reach for? We have this low resistance liquidity up here. We got a swing high here, and there. Ultimately, the previous daily high would be a target. Okay, and I just always want to look at the ADR levels, and so notice here we didn't even get to the ADR level down in the sell side, but we have a lot of room to go to the 1/3 ADR up here. That would take us deep up into the daily bearish fair value gap. Regardless, after seeing the reaction out of this bullish hourly fair value gap, the inversion of this bearish hourly fair value gap, I feel confident that I will be seeking higher prices. Now, on the M5, we want to take a look at the chart and see if there's anything there. All right. Now, first things first on the M5, let me go ahead and just clean some of this up. Get rid of this. We can see here that we came down here, and over London, we dipped into the hourly bullish fair value gap. Okay. I'm going to mark off here that this was a liquidity raid, right? So anybody who trades T-trades, this is a C2 raid, right? So whenever we have that, we want to take a look at the series of down close candles that took that liquidity, and we can mark that off as a change in the state of delivery. Okay. We also have a bullish breaker here, and look how price just delivers right through that. Right, that's a displacement candle left behind a fair value gap, and then we have now displaced again higher. Right. So I just want to make note, we have a strong draw on liquidity right here, our London high. We also have an Asia high above up here to reach for, right? So this is our Asia high. And our 1/3 ADR is way up here. So when we have a lot of room and we have strong draws on liquidity, right? We've got this London swing and the Asia swing. And clearly, we are on the right side of the curve at this point, in my opinion. After coming down into an hourly POI, I'm going to start looking at ways to get involved with a continuation move, right? And with a continuation, I'm going to need something very similar that I require down here, right? So I want some sort of a move down into some liquidity. So in this case, we've got an M5 fair value gap right here. I would like to see price move down into that, and then trade away with some displacement. So I'm watching price. Oh, we've now just moved into the M5 fair value gap. So I'm going to mark this off as a order block, and I would look to see price close strongly through that. Okay. Now, on the next couple, let me go a little deeper there. And the very next candle we close, but we close too high. I don't want to chase price here. Okay. So I will set a limit order here to stop at this swing low. So we would expect this to be a protected swing now that we've closed strongly through here. And let's see if price comes back down and tags us in. We actually do take the London high here, but we close strong through it. Okay, so whenever we're looking at swing points, it's a way to figure out whether or not we're still looking bullish in this case is how do we close once we hit a significant swing. Well, once we hit the London swing high, we closed strong through it, which has been an indication to me that we would like to continue on higher, possibly up here to the Asia high, and ultimately maybe to the 1/3 ADR. So I'm going to keep my limit on right here with I have a 2R, and this 2R makes sense to me, by the way, because before hitting Asia high, we would have hit the 2R, right? So I'm just going to watch price here. And at this point, right at the 1140 candle, we get tagged in, and this goes immediately to our take profit. Now, price actually just kind of flounders here, doesn't do anything more. Okay, again, I didn't take this trade, but always reviewing my pairs, trying to understand. Look, once we have an idea that we have made a true reversal, okay, and this happened over London, but if we have room to go, look at this. This is down close candles being supported by strong bullish moves, closing strong above. This comes down, tags the order block, and goes 2R. If you guys got anything out of this at all, please smash the like, drop a comment, and I really appreciate anybody who subscribes and anybody who watches these videos. I thank you, and I hope you have a great day.